Hey everyone. So this is probably the third time I'm trying this. I'm hoping that this time it will work. But we're going to try go through Baratheon. I put a little video here just so you can actually see it's a human talking to you and not just the computer. I'm also hoping I don't go too quickly because, as I said, I've done this a few times now. And we'll see, hopefully this one works. Also, because I'm using the free version of the software, we're going to have to split it up into two videos, so we'll see how that goes as well. I think I'm going to do it. First half we'll talk about the tutorial and the things you should be thinking about, and then the second half we will do the answers together if that works. So let's give it a try. Now, we start off and we're looking at Baratheon, 45 marks, 81 minutes. You see the lovely words, ignore that. And then we get told Baratheon runs a restaurant. They have burgers made from a variety of South African animals. December year end. Performed quite well, but there was a fight in the restaurant and this had a negative impact on revenue in the year. Okay, so two big scandals. One regarding the food that they prepare and one regarding a fight. They've asked you about some tax issues and then we get into the actual details. So the first one. In November 2020, so during the 2020 year, a customer complained of an upset stomach while eating at the restaurant. They visited the doctor, but they found out it was food poisoning. And we looked and found out that one of our chefs had left some meat out of the fridge overnight, and the meat had gone bad, caused the customer to get sick. So straight away, the first thing you should be thinking of is, well, is this something in the production of income? Is this an inevitable concomitant? So you'd be needing to ask, is there the risk of meat being left out of the fridge overnight? Is it linked to the operation of running a restaurant? And I would probably say yes. Some of you may go, well, that's negligence. The chef shouldn't have done that. But I'll say, as a restaurant, do you run the risk that maybe you might leave food out of the fridge when you weren't planning to? Especially if it's by mistake. I think that that's reasonable to expect that that would happen in a restaurant. Therefore, in my mind, it would be certainly in the production of income. But that's not where it ends. So Baratheon didn't want the public to find out about the incident. So they offered the customer 50,000 Rand on the 25th of November 2020. Now, they raised a provision on the same date as they expected the client to accept the offer. So the key thing here that this has not been actually incurred because the customer hasn't accepted it yet. They've raised a provision for accounting, but that doesn't really tell you anything for tax. What we know for tax is that on the 25th of November, nothing has been actually incurred because nothing's been accepted. So there won't be any deductions so far. Okay. Now it turns out when we scroll further down, the client actually rejected this offer and instead decided to write negative reviews of the restaurant in the newspaper. Hence the reason we had a drop in revenue that we spoke about at the start. Now, to try and win back the customers who heard about this, we decided to instead donate this 50,000 during the year to a local charity, Doctors Without Borders, not a registered PBO, and we did this for publicity reasons to win back customers. So some key things here. On the 1st of December, we actually donated, so it is incurred. The questions we have to be thinking about is, well, it can't be Section 18A because it's not a registered PBO. And then we have to ask, well, could it still be Section 11A? And you're going to have to be thinking about, is it in the production of income and is it of a capital nature? Those are going to be the two key things that you have to decide on. When we look at the second issue, we again see it happened during the year. And what happened is a customer entered into the restaurant while intoxicated and caused an argument with the waiters. And the fight broke out, table was broken, and thankfully no one is injured. However, we pursued legal action against the customer, and the judge ordered the following. The customer has to pay 20,000 to the waiter for emotional damages, 30,000 for the damage, 3,000 for the damaged table, 7,000 from lost sales for the evening, and 20,000 for the loss of reputation that we suffered. The customer paid the full amount to Baratheon on 15 December, and Baratheon gave it to the waiter the next day, their portion. We then have details about the table that was purchased. So the things that should be popping up here straight away is we can tell that Baratheon is receiving money, we can tell that the customer is paying money, and we know that some of the money that Baratheon is receiving is not for Baratheon's benefit, but is actually for the benefit of the waiter. So straight away you need to be asking, well, there's 4 different amounts here. What happens with each of them? So the 20,000 for the waiter, does it actually accrue to Baratheon? And if it accrues to the waiter, how would it be treated for the waiter? The 3,000 for the table, who does it accrue to? And is it capital in nature or not? The 7,000 for the lost sales, who does it accrue to? And is it capital or not? And then lastly, the 20,000 for loss of reputation. Who does it accrue to? And is it capital or not? At the same time, you need to ask yourself, why am I giving you information about the purchase date and the cost of the table? How are you going to have to use that? And does a table being damaged and destroyed count as a disposal event for CGT? We then move on and I say you've got sales for the year. Pretty simple. That's just going to be added in. You are given opening and closing stock. So again, you know what to do with each of those. And then you're told during the year some stock was taken and used for a staff training event. Okay. Now, sorry, there was a slight pause there. I'm still figuring out how to do this. Just wanted to show you my face for this. So what we need to do is remember that any units we take out of trading stock during the year and don't sell them, we're going to have a 22H recoupment. But if we still use it in the furtherance of trade, i.e. like using it for a staff training event, there's going to be that 22H recoupment proviso that will allow us to deduct the amount we just added back. So that's what you should be thinking of. When you look at stock as well, I tell you that some of the wine has increased in value, and you should automatically be remembering that, hey, we can't ever write stock up above cost. So we should know that nothing should be done with that. Okay. We move on and we say, hey, we bought a new computer system. Key thing here, we bought it in dollars, so we know there's going to be Forex. We're also told it replaced the previous system. When you're seeing replacing systems, you should be thinking about, hey, is there a possibility that I might be rolling over recoupments or rolling over CGT? Okay. So this system, bought on 1 August 2020, paid for 1 October. So we know this is the date that it's incurred. That's the date that it's paid. There's going to be Forex differences between those 2 dates. We were worried about foreign currency fluctuations, so we took out a forward exchange contract. The key thing here, that forward exchange contract is not for the full amount. It's for a partial amount. Okay. We then also told it was brought into use on 1 August 2020. So we don't have to worry about the fact that it might have been brought into use in the next year. It was all being brought into use in the current year. But do stop and think about what would happen if it was brought into use in the current year. Okay. Great. We then move on and say, well, here are our exchange rates. So we've got, it's given to you $1 is equal to how many rands. So we've got it in the direct method, which is what we want, and we've got for the 3 dates. We also told that the previous system was purchased in 2014 at a cost of $50,000, sold for $60,000. Proceeds were used to fund the $50,000 donation made to Doctors Without Borders. This automatically tells you that you can't have the rollover because the proceeds from the previous machine weren't used to buy the new one. Cool. Some stuff to note as well. Just remember, we're going to have to look at the change in rates for the debt, the change in rates for the forward, and remember to do the actual machine at spot rate on the day that it is born. We're also going to have to do the disposal of the old machine as well, so don't forget that. I'm going to come back to this. Actually, let's do it now. So I tell you obtained a meat grinder in April, but I tell you obtained it on a finance lease over 4 years. Payments of 5,000 Rand a month. I then give you the value of the machine on the day you bought it and at the end of the year, and I tell you it's an installment credit agreement. Now I'm bringing in some VAT here. This is something we haven't covered yet, so don't stress. But what you should be thinking about is, hey, we have the use of this grinder, but we don't own it. We are leasing it. So we know straight away we can't be claiming allowances on the asset. We should be claiming the lease payments. Now, you haven't dealt with VAT being integrated too much, but what you should be seeing is we should be claiming that 5,000 Rand per month, and VAT should probably be coming off of that payment. How we do that is not a stress now, but it is important that you look at that 5,000 Rand and know that's what you should be claiming, not allowances on anything else. I then furthermore tell you we bought copyrights and we bought designs. Key thing here, remember, we don't buy and sell copyrights and designs. It's not trading stock. These are going to be capital items on which we might receive allowances. Okay, so you just need to remember the sections we're dealing with. We're dealing with GB and GC. One of them is for the purchase of the actual intellectual property, and the other half is for the cost that you pay to register it. Remember, this is going to be the deduction. This portion is going to be subject to the allowance. The exact same thing for the design. This portion subject to the allowance, and this portion subject to the deduction, provided it meets the requirements. I then tell you the number of years for each asset, as well as taxable income. Great. Then you look at the required and you say, we've got 3 requireds here. The first one, discuss the normal treatment for Baratheon relating to the information presented in respect to the customer who got food poisoning. Include the treatment of the subsequent donation. So what you're needing to find out here is that we're looking only at Baratheon, and we're only looking at the element relating to food poisoning. So you're not looking at the actual customer. What you're looking at here is pretty much going to be 3 major things. It's going to be, well, what was the event that gave rise to this expenditure? So is it in the production of income? You're going to look and see, when did it happen? So was it when we offered it to the customer? Did the customer actually accept? And then also, you're going to have to look at the donation that happens afterwards. Can it be Section 18A? Is it going to be deductible? Is it in trade? Is it of a capital nature? And you'll see this is for 11 marks, so it's quite a large discussion question. So you're going to be able to have quite a few points to talk about. B asks about the issue with regards to the settlement, but again, very importantly, only asking for it from the perspective of Baratheon. It's not asking for it from the perspective of the others. So what we need to look at and see is, well, of those 4 amounts that we received, what accrues to Baratheon? Does it go into gross income? And when, at what amount, those type of issues. We're also going to have to look at what happens with the table for which we receive money. And then part C, I ask you to talk about the taxable income of Baratheon for the year. So this is going to be the number side of things for everything that's given to you in the question. So here you're looking at the forex, here you're looking at the intellectual property, the new machine that you bought. I don't know if you can hear my dogs in the background. That's part of the fun of recording at home. And yeah, so that concludes what we are looking at for the question. I'm now going to have a second video where we look at the actual answers.